Welcome back, everyone. Welcome back to Monica Point 8. All right, Aiman here. Okay, so looking at the S&P 500, well, it slipped by 0.19% on to close at 7443 points on Monday session, well, extending its modest retreat, right? Well, I think the AI and also the semicons heavyweights like Nvidia began to stabilize right following the weak sharp pullback. I think the broader market drifted lower as the treasury yield is still raising, right, and also the ongoing geopolitical tension headline kept the investors on the sideline ahead of the massive wave of the mega cap tech earnings as well, right? So for yesterday, looking at our the US trading stocks that we publish, right? So we got Valero Energy or stock code VLO, right? So the stock experienced a breakout at a $300 level, and now we can expect the stock to travel towards the $325 level on a strong momentum, followed by the next resistance at $350 level. Now, again, if the counter to reverse, do watch out for $275 level for its immediate support. Right. Also, next we have Occidental Petroleum stock code UBXY. Right. So look at the charts now. Well, the counter charter high market structure, right? Testing the 55 dollar level. Well, if the bullish momentum to follow through, the next resistance is at $58 level, followed by 61 dollar at for the second resistance, right? So if the stock to slide lower below the $52 level support, well, this might signals a shift to a bearish structure. So do watch out for these two stocks and put it in your watch list for US trading stocks, which is Valero and also Occidental Petroleum. So if you look at the China A50 futures, well, it surged rebound, right? Rebound 3.45% on Monday session. Well, climbing back above this 14,700 point level on strong rally. Well, this driven by the heightened expectation of aggressive fiscal policy support and the accelerated bond issuance ahead of Beijing upcoming meeting, right? Also, investors look past the weak second quarter GDP print to price in the near-term government stimulus. So, I believe at this juncture, the immediate market sentiment has pivoted to a strongly constructive bias. And yeah, of course, if you treat this China A50 futures, right? The level that you should be focusing right now is at this significant key level of 40,700 points level right now. Well, then on for the WTI crude oil futures, well, it rose 0.58% on Monday session to settle well above $83 level per barrel yesterday, touching their the highest level over a month. So if you see here, prices drew persistent support from the barrage of the Middle East geopolitical headlines, well, including the new threats of Houthi forces to ban maritime traffic from the Saudi Arabia, which to me, I think, well, this offsets, the tentative diplomatic chatter regarding the potential 10-day cessation of the strikes between the US and also Iran. Also, on top of that, right, so yesterday's hike was also supported by the news that Trump, say that Iran will pay for the killing of the U.S. Military member. So this has left investors in shock and uncertainty to the market again. However, for now, we are still looking for a proper rejection at the 85 level, aligned with the 50-day moving average, and this is our stop loss at $85 level right now. And also moving into our Malaysia market, right? The FBM KLCI rose, declined by 0.53 percent, right, to close at 1722 points, while the FKLI dipped lower by 0.66% on Monday's session. Well, you know, um, for this FKLI market, I think for the MKLC, I will found firm upwards recently, bullish momentum recently, as the institutional investors, aggressively rotated out of the tech into the banking, and also consumer, and also plantation names, for these past few weeks. Meanwhile, for the FKLY, it settled lower, under late day hedging pressure ahead of the key corporate earnings, and also the macro economic data as well. Also, taking a look at the FKLI, taking a closer look here, well, it trended up higher, right? And now trading above all the moving average. Well, despite yesterday's decline, I think the overall trend still in the bullish side of things, and if any pullback to happen, right? Well, at least do watch out closely at this 50 uh, the 50-day SMA line, blue level right here. Well, at this juncture, we keep our bullish trading bias intact, or positive trading bias intact. Our stop loss remains firm at 1680, and our first resistance is 1760 level. So just to highlight this to you all, right? Looking into this heat map, it clearly shows a sector rotation following the yesterday's move. Well, you see, the heavy profit taking in the major banking giants like Public Bank, Maybank, way down the FI segment, or the FI sector, while the green wave across the tech, led by Inari, we have Vitrox right here, also Netkit, right, showing aggressive deep buying as return to the tech, and also the semiconductor um, sentiment play, right? So moving to our Malaysia trading stocks, well, we have Suncon, or Sunway Construction, right? So the stock is on its pending breakout formation, at 7.60 level. So with that, we expect the momentum to keep bullish and the stock able to propel or to test higher at 7 ringgit 90 level, followed by 8 ringgit 20 level. So if the stock to clear the 7 ringgit 30 support, this could reverse the course and trend lower. Also next, we have Harta Lega, well, the glove stocks, right? So uh same. The stock is experiencing a pending breakout as well, at 1 ringgit 5 level. Well, if the bullish momentum, positive momentum to follow through, do watch or target for 1 ringgit 10 resistance, followed by 1 ringgit 15 resistance level, and do keep an eye at the 1 ringgit level for any attempt of reversal or uh, follow through of the bearish momentum. Right, so we have two pending breakout stocks for today, which is Suncon and also Harta Lega. Right, so just so something to recap, right? If you remember this great tech counter, well, I did show to you last week, right? So our view is that if the bullish momentum to continue or to follow through, well, it may travel towards the 2 ringgit 55 level. This is due to the formation of the role reversal pattern of resistance become support. Uh, if you can see here, this is the, hold on, let me change the pointer. Okay, so this is the resistance, and this is the breakout point, and this is the support level. So one more thing is that from the technical point of view, this level, right, or zone, I would say, right, is deemed strong due to the numerous times of it tested this level, right? So again, if you believe the bulls to hold, let's aim for the 2 ringgit and 55 cent level, and also 2 ringgit and 75 resistance level. So to me, this is still a good setup where you can buy low and sell high later, right? And for the FCPO, looking at the FCPO futures, well, it gap up and extended its gain by nearly 1% on Monday session, right? Testing closer to the um key psychological level at 4,700 ringgit, right? So this aggressive bullish opening was driven by the weekend spike in the crude oil prices, fueled by the the tension, the geopolitical tension, which drastically improved the biofuel blending economics, alongside with the renewed market side anxiety over the strengthening of the outlook impacting the future crop yields. Well, until it cross above this 4,700 level, we hold our negative bias at this juncture. So that's all from me, and I pass the floor to Adam for his updates. Thanks, everyone, and happy trading.
All right, good morning, everyone. So today we have a sector update on the construction sector. So from how we look at how things have been going in terms of project flows, for the first 6 months of this year, there's about 108 billion worth of projects being awarded, compared to, I think, last year's 230 or 200, I think it was 240 billion ringgit worth of projects awarded. But we understand that last year's numbers was actually the highest number recorded since 2016. So it is quite of a tall order for the project awards to match last year's. And to be fair, there has been a lot of data center awards, along with some large infra awards which took place last year, like the first segment of the Penang LRT. So this year, despite the lower potential awards that we see, we still think that there's a lot opportunities for contractors, particularly from the data center space. I mean, if you look at the amount, the size of gigawatts for the electricity supply agreements, or ESAs, that have been signed with Tenaga Nasional Berhad, we estimate the total potential construction value to be about 38 billion, which is up for grabs for contractors. And this should basically help to enable a steady pipeline for the next few years for contractors in Malaysia. And this would definitely help to provide a cushion to the public infra space, which is a bit not to say quiet, but there's nothing really major to look out for, except for the second segment of Penang LRT and the third segment of Penang LRT, along with the JB ART, which are public infra projects that we could look out for in the coming months. So top picks still include Suncon, Kejaya, and Gamuda. We still think Gamuda is in a way a hedge towards any domestic risk, given that it has a sizable exposure towards Australian and also Taiwan projects. And aside from that, Suncon is a strong name in data centers. And for Kejaya Prospect, we continue to like it, given that it is able to retain its margins despite the cost pressures that we saw, particularly between March to May this year. So that's all from me, everyone. Thank you for dialing into today's RHB Morning Kappa 8. We'll see you tomorrow at the same time and same place. Have a good trading day ahead. Bye-bye.